Hello, good afternoon. Welcome again to the second episode of financial planning or financial planning, whatever way you choose to pronounce it. Welcome all. Again, my name is Shernette Clark and I am a financial advisor. So, the commonly asked questions from last week's live, for those of you who were in the live and for those of you who watched the replay, I had a lot of questions flowing in. I only have a few minutes to answer just a few. They're all important, so I'll just take the time just to answer a few. Some were actually based on the gist of the questions. They were repeated questions, so I'll just go along with the general consensus of the questions that were given based on the live that was done last week. Welcome everyone, welcome again. One of the questions that were asked last week was, what does critical illness entail? A lot of persons are confusing the critical illness coverage with their health insurance, which is the card that you would use if you're doing doctor's visit, dental, vision, etc., x-rays, and major medical coverage. The critical coverage covers you upon the event of a diagnosis. So for example, cancer, if you're diagnosed with any form of cancer, stroke, some cover coma, heart attack. Upon diagnosis, that policy will terminate and pay you the lump sum for which you're covered for. So for example, again, if you're covered for 5 million, upon diagnosis, that plan would pay you, which is a living benefit, not a death benefit, but a living benefit to you, the person that is insured. If it is that you died as a result of one of those critical illness that is stipulated in the critical coverage plan, it also pays that amount to your beneficiary or beneficiaries. Hope that is clear. Another question that was posed was, how do I know if I'm qualified for a critical illness insurance? The ones that I'm acquainted with, persons from 18 years, you have 18 to 60 and you have 20 to 64. So those persons would qualify to apply. There are questions on those applications, of course, and you have questions like, for example, if you have ever been diagnosed with cancer or anything that could be potentially cancerous. For example, an abnormal biopsy or abnormal pap smear or PSA for the men. Those questions are very important to answer, because if it is that you have been already diagnosed, then you won't be able to get a critical illness insurance. But there are other insurance that you can get even after diagnosis. So don't rule it out. There are other coverages that you can get, because I've had clients who have already been diagnosed with cancer and they have the opportunity of getting a non-medical insurance. That doesn't speak to that aspect. You have non-medical critical insurance and you have insurance that may require a medical. So the ones that are non-medical, as the word suggests, does not require a medical, but of course there are questions on the application that needs to be answered truthfully. Another question that came out of last week live, and guys, I really appreciate your attendance, your presence, your participation, is do you need a medical? Well, I answered that one. Someone says, I'm already diagnosed, can I get critical illness coverage? And I answered that one already. No, you are not able to get it, but as I said before, there are other non-med insurance coverage that you can get in the event of death and an accident and dismemberment. Some may cover some hospital benefits in the event of an accident. So there are other insurance that you will or can qualify for. Again, you have one that is issued between the age of 18 years to 60 years, and you have another that is issued between ages 20 to 64. So you have the opportunity, and you have many stipulations and conditions as it relates to the critical illness. Think of it, as I said before, of you contributing $3,000 a month to insurance coverage. Persons would say, I'm able to save that amount, and I always contest to save. For example, if you're putting $3,000 in your savings account, your bank account, your regular bank account, and you save that for 6 months, that is $18,000. And if you had put $3,000 in insurance, doing it specifically for critical coverage, and you're diagnosed after 6 months, that amount that you're insured for, again, the 5 million example, would be what would be paid out to you, which would be a living benefit instead of $18,000. And if you know where the cost of treatment are coming from, then you would understand that $18,000 would not be sufficient to cover for that treatment and getting well. I want to acknowledge those again, to be positive, be encouraged, keep fighting as we are closing out the month of October. Today is the 27th, and I do want to encourage again, and also my condolences, my sincere condolences and prayers to those who have lost a loved one or loved ones from this horrible sickness. As it relates to my other topics now, life insurance. One of the pertinent questions that I brought up last week was, did you know that life insurance could be used as a real estate acquisition? And I will give you a personal testimony. I recall, we'll call it a big ticket item, the purchase of the first house, and I'll declare that the first house, that in Jamaica we are used to facing this escalation costs after the house is being built or the scheme. And I remember after depositing on the house, I had no idea where the closing cost was coming from, because you were looking at this exorbitant amount of $1.5 million to be exact. And I remember taking out an insurance policy long before I became an agent, now today is a financial advisor. And I remember getting some statements, annual statements from the insurance company, and of course we don't read sometimes the documents that we receive. We get them and we just put them down, and it so happens during that time I decided to look at it in more detail, and I realized that it had some money, and the money seemed to be getting larger. So, you know, I was curious, and at the time I turned to the person that was present and I said, I wonder, you know, I've been paying the premiums, but this money keep increasing. Why is this money increasing? And they said, if you don't know, you know, call the insurance company and find out what it is all about. And I did the very morning, and they told me that, actually called the day before, that's the actual day when I looked at it, and they told me that it's my cash value, it's my dividends, it's my savings, all of that good stuff. And so I said, how does it work? Do I have access to it? And I was told yes. The amount that were on, I think it was about 4 policies, would not have covered the 1.5, but it would have made a really large dent in the amount that was outstanding. And I decided, I asked if I could come in the next day, and they said yes, and I could get the check the same day. Of course, I approached the company, you know, being uncertain, because I said, you know, nothing can go like that, because I don't recall putting any savings on my policy. And when I went, in truth and in fact, and I asked if I could have gotten a manager's check, and well, it wasn't, and I think I asked afterwards. So I actually went to my bank with the check and then got the manager's check and take it. Well, at the time, I took it to the company that I was purchasing the house from, and guys, that put a dent. The fact that I was able to do that amount on the closing cost, they allowed me to move into the property with the balance that was left, with a promissory note to pay the balance. No, I've never heard of that before, but it did happen. That's my personal testimony. So for those of you who are looking at big ticket items to purchase the car, the house, maybe another house, you can think of your life insurance policies as your, I guess, your deposit or closing costs on your property. Another aspect of life insurance that you can use is that most of the lending institutions need insurance for the purpose of loan. So if it is that you're going to be purchasing a home or land, they need you to have insurance. And in most cases, the loan may have an insurance attached to it, but what I encourage my clients to do is that those insurance are credit for life. So when you're done paying for that mortgage, you're not necessarily insured. But if you take out an insurance with the insurance company when you're paying on that loan, and the less you owe, you still have that insurance coverage after the mortgage is completed. So you actually leave some money for your family. So you want to think about the options that you have, and we have a lot of options. So of course, as I said before, it can be used as a real estate acquisition. So your cash value can be used as collateral, and the policy can be used as assignment for the purpose of mortgage. So again, the cash value, so that's the cash value that has accumulated on the policy, can be used as assignment to the loan, and the insured amount, so the sum insured, the face amount or the death amount, whatever you call it, can be used as assignment to the loan. All right. So basically that is it as it relates to life insurance in terms of real estate acquisition. I've also spoken about the critical aspect. So your critical illness, or someone asked that question, can my critical illness be used as a collateral, as a assignment to the loan? And that's a no. So you need to have your life insurance separate with your savings on it, with your accident and dismemberment, and you can also add some supplemental term. And how the supplemental term works is, let's say for example you want to purchase 20 million worth of coverage and you're only able to afford 10 million now. What you can do is have 10 million as your face amount and then put 10 million in your supplemental, so you would pay less. You're only paying really for the 10 million every month, and every 7 years the 10 million that is in supplemental term will increase. So year 1 or 2 after you have purchased the insurance and you want to purchase more insurance, the supplemental term, a part of it can be converted. So you can now convert, take off 2 million of the supplemental, put it on the face amount, or you can convert all of the 10 million, so it can be part or all of the supplemental term without even evidence of insurability. So you don't have to do a medical if you had to do one before, or you don't have to be answering those questions once you have that insurance in supplemental term. Again, critical illness cannot be used for the purpose or assignment to a loan, because critical illness is a living benefit. It's not a death benefit. So the lending institutions won't be accepting critical illness as a assignment for a loan. I want to answer another question that I saw. And so basically I think I've answered most, because as I said before, some were repeated questions. And basically persons were also asking if they can buy both life insurance and health insurance and critical illness at the same time. Again, you can have any amount of insurance coverage or plans that you want. Once you are able to pass a medical, the ones that need a medical, based on your age and gender. So therefore, if you have some insurance that may cut off at age 75, some at 60, so it depends on what plan you're qualified for, and also affordability. So those 3 aspects are bear in mind. Qualify for medical if there's one needed for that particular plan, and the second one, if it is you're qualified in terms of age, gender, and also if if you're able to pay for the insurance. So I'll encourage my clients, basically, how do you determine how much insurance do you want or should have? Because sometimes what you want is not necessarily will cover what you have in terms of your estate and in terms of dependents. So if you should pass on, for example, if you're the main breadwinner, can your children still attend school? If your mother is dependent on your income, can she continue being able to cover her basic necessities, her food, her shelter, her clothing? So those factors are very important. Thank you, Andrea, for coming on. Andrea Wilson Green, big up yourself. Bake Expo director, and Alicine Brown, thank you. You make it this week. Welcome. And of course, you want to bear in mind that your income. So let's say, for example, you are earning 10 million per year. You want to make sure that is 10 times that 10 million that you want to put in insurance. Again, it's based on affordability. If you're not able to afford that now, then you purchase what you can. But ideally, if you're thinking about, for example, if you purchase a home and it is tenancy in common or joint tenancy, you have to know which one of those you're going to have to be paying stamp duty or transfer tax if one of the owners pass on, and in Jamaica or wherever it is that you're living, you have to transfer the property out of the deceased name. And there's normally, for example, in Jamaica, the government says we need to do that within a year, tie up all of that within a year. And each year, I don't think it has increased, it's 6%. And that's normally the value, the cost of the value of the property. So you want to make sure that you have monies as it relates to insurance, because insurance contract doesn't fall under a will if there is a will. Because there's a named beneficiary, it is passed on by law of contract. So therefore, that money would have been available to you within 24 to about 36 hours. 36 hours once all the supporting documents that the insurance company require is submitted. And submitted meaning original copies. The claimant's form need to be signed, filled out, original IDs, TRN, or in the American case, your social security, all the supporting documents. Once those are submitted in a timely manner, then that fund will be available in terms of final expenses to deal with. And we know that probate in a will can take up to 10 years if we need to pay monies for those. Children need to continue going to school. The dependents need to continue to eat. A roof over their head if the properties are either still paying for mortgage or is a rental property. So you need to make sure that the family is not under strain. Mourning at the same time the death of a main loved one, which could be the main breadwinner, and of course no monies to deal with those eventualities. If the person was ailing before they pass on, you're thinking about hospital expenses and tests probably that had been done before. So you have a lot of expenses to be thinking about. So life insurance creates that capital, that flow to the families of the deceased to deal with the final cost. And final cost, as I said before, we always think about just funeral, burying the person, and of course Jamaica, the fine style 9-night, we have abashments, so we need monies to deal with those. So of course the basic necessities, food, shelter, clothing, education if there are still children who are attending school. And I promise that of course the lives would have lasted only 10 minutes, and I don't want to go over my time. I want to take note of the time that I have been doing the lives. And of course I promise to bring on some experts as it relates to, we're going to be doing filling out a will, how it is supposed to be done in terms of the witnesses, the executors, the lawyers, everything as it relates to that, because some of us have some information written down on some piece of paper that may be invalid when it's time to use it. So I'll be having those done on the live, and of course we'll be having some videos coming out shortly as it relates to more details as it relates to financial planning. So again, I want to thank you all who came on the live for joining me today again. And I want to invite you next week again, same time at 4 p.m. for financial planning with me, your host, Shernette Clark. Thank you guys. Enjoy the rest of your afternoon and walk good.